Well, considering you've got such bullish momentum coming through in so many developed markets at the moment in the equity complex, it's surprising to see the ASX languishing so far behind at the moment. You've got really very bullish setups coming through in the S&P and the Dow, new all-time highs there. You've got that leadership group being re-established in the Nasdaq. The FTSE wants to push into the recent highs of 75.50 into 7600. That's been the key sell zone. Perhaps we can break through it this time. Japan's markets today looking very positive. We've seen a higher high there. That looks probably one of the most bullish markets around in terms of what we've been seeing there. We've seen it, if you put it on a 4-hour chart, you can see the break of the bull flag position pattern, and that's made a new high today. So certainly buying pullbacks and expecting higher levels, and the Nikkei looks like a good trade at the moment for me. But we're not seeing that here in the Australian market. The market's down a touch today. We've got big selling coming from REITs. There's been a lot of negative news around about housing markets again. Similar to what we're seeing in Canada, the bubble has cropped up once again. If you are sitting in the UK and looking at a key macro thematic, which is definitely worth watching over the next sort of 12 to 24 months, if you've got that sort of time on your hands, then I think watching the Australian housing market is something that's really going to be very fascinating, because we're going to be watching construction, whether that pulls down, building approvals, whether that pulls away, whether we see unemployment in construction start really dropping, whether apartment volumes start really coming off quite sharply, and then that could sort of manifest on itself, and that's going to be a big macro trade which could really drive the Australian dollar significantly lower. The RBA themselves do have some room to wiggle in terms of monetary policy, and they can cut 150 basis points from the cash rate, but certainly they're not in the idea that they're going to be wanting to do that at the moment. We did hear the RBA minutes today, and no real clear clues from there. The Australian dollar hasn't done a lot today. It's looking like it wants to push back into 76 cents after spending quite a lot of the session below that level today. So that'll be interesting to watch there. But certainly the risk is on the front foot at the moment. But Australia, we are seeing some negative flows today. We're seeing banks under pressure, REITs under pressure, as I say, mining stocks, and certainly energy underperforming again. We've got the oil price right at the bottom echelons of that recent range there. So certainly oil prices are under pressure. You've got Dalian iron ore futures down about 1% at the moment, and the Chinese equities holding in very firm. There's been a lot of rhetoric about what's happening tomorrow when we get the MSCI re-ratings or potential increased inclusion from Chinese stocks in the emerging market basket. It's a very small amount of money. We're not expecting fireworks even in Chinese equities, even if they do get considered. But it'd be worth watching just to see how Chinese mainland speculators treat that.